Hi, I'm Dan King and I'll be your guide through this video. Just a quick note about the format of this video. We will be covering how to fill out the full application for PPP forgiveness. We have another video on filling out the easy form. If you are listening to this video, that means you have determined that you are not qualified to use the easy form and must use the full form. There are two possible reasons why you are not qualified to use the easy form. First, the business reduced an individual employee's wage by more than 25%. And that means wage, not hours worked. You can reduce the hours worked. Or second, the business had a reduction in its FTE count and they were unable to take advantage of any of the safe harbors that would make this FTE reduction irrelevant. Some of the safe harbors are broad, and if there is any doubt in your mind, I would urge you to go back and listen to the first 7 minutes of the easy video. Believe me, if you find out that you can use the easy form, the 7 minutes spent will be well worth your time. The rules on PPP forgiveness were greatly simplified when Congress passed the Flexibility Act. Even with that, some of the rules are dense and not very easy to follow. In this video, we will tell you the basics of how to fill out the forms without going down the rabbit hole of providing a full explanation. Most of you won't want that much information. If you do, from time to time in this video, we will have geek notes. If you want to spend some time with these, pause the video and read to your heart's content. We will take you part of the way down the rabbit hole, but I guarantee you we will not take you all the way to the bottom of it. Now on to the form. The documents consist of two files, the 5-page application and the 7-page instructions. The application itself consists of 4 sections. The calculation form, where you will enter your calculations and determine your forgiveness amount. The certification, where you will certify that a number of things are true. Schedule A, where you will enter the calculations for some of the specific line items that will impact your forgiveness. The Schedule A worksheets, where you will list many of the details that back up your calculations. And the demographic information form. Before we dive into these forms, I would note that there are several Excel models that have been built to assist you with filling out these forms. We have reviewed some of these and are aware of some that are quite good for a fairly modest fee. We also know that the Colorado SBDC network is working on a model that will be free of charge. That model is not available on today's date, but you may want to check back to see that if it is available when you are ready to start the application. We would also note that there is always a possibility that this form may be changed, so please make sure that you have the most current one. We are using the most current form available on today's date, which is August 12th. There is also a reason to believe that this form will turn into an online portal, and you will input the information directly into that portal. That portal does not exist today, so we can't tell you much about it. Finally, as you probably know, most banks are not yet accepting forgiveness applications. This is because they are waiting for final clarifications from the SBA. Some of these clarifications may have an impact on how we are presenting the forms today. Additionally, different banks may interpret some of the rules differently. I apologize in advance for that. If your bank tells you to do things differently than what I have presented today, don't argue with them and tell them that Dan King said. Just fill out the form as they want the form filled out. Since you are using the full forgiveness form, you have already determined that you either had a reduction in FTEs and/or an employee who had their wages dropped by more than 25%. In the next few slides, we will quantify how one or both of these items will lower your forgiveness amount. To do this, we will start on page 4 of the application, which is titled the PPP Schedule A Worksheet. Let's take a closer look at it. There are two tables that you need to fill out on this page. There is a difference in how employees making less than $100,000 per year are treated as compared to employees making over $100,000 per year. Table 1 will deal with employees making less, and Table 2 will deal with employees making more. It is likely that the tables provided will not be large enough for many businesses, and you will have to create a spreadsheet that models these tables. Let's look first at Table 1. In this table, you will list all employees who worked for the business at any point during the covered period or alternative covered period. What is your covered period? And why might you have an alternative covered period? I'll leave that for the geek note on the next page. Remember, I will only show this note for a few seconds, so if you want to go into detail on this point, be prepared to pause the video. For the remainder of this video, I will only reference the covered period. If you are using an alternative covered period, just use that definition. Continuing with Table 1, first, list the name of each employee who worked during the covered period. Next, list the employee identifier, which will be the last 4 digits of the employee's Social Security number. Next, you will list cash compensation for each employee during the covered period. Remember, in this table, we are listing only employees making less than $100,000 per year and no owner employees. They will come later. The cash compensation portion is pretty straightforward for these employees. It includes salaries, wages, tips, commissions, paid leave, unless that leave is related to the Families First Coronavirus Act. If it is, see the next geek note, and allowances for dismissal and separation. Remember, you can include cash compensation that is paid during the covered period and cash compensation that is incurred during the covered period. If you are unclear on this point, see this next geek note. You now need to calculate what portion of an FTE each employee was during the covered period. FTE is an abbreviation for full-time equivalent employee. FTE calculations can be critical for your forgiveness on this form, so let's spend some time with this. There are 2 methods you can use for calculating FTEs. The first method is easier to use. Basically, everyone who works 40 hours or more a week counts as a 1 FTE. Everyone who works less than 40 hours per week counts as a 0.5 FTE. Yes, someone working 38 hours a week is a 0.5, and someone working 2 hours a week is also a 0.5. The second method will require you to have a better access to your detailed payroll records. In the second method, everyone who works 40 hours per week or more counts as a 1 FTE. Everyone who works less than 40 hours per week counts as a percentage of an FTE rounded to the nearest tenth. The calculation is hours worked per week divided by 40 hours. If you are calculating this for a period of time, say a 2-week payroll period or a 24-week covered period, you will need to know the average weekly hours worked by the employee for that period and divide this by 40 hours. Using the same numbers we used a moment ago, our 38-hour per week employee is now a 0.95, which of course rounds up to a 1. And the employee working 2 hours per week is a 0.05, which rounds up to a 0.1. A business that has many very part-time employees can end up with a higher FTE count using the first method, while a business that has many part-time employees who work over 20 hours per week can end up having a higher FTE count using the second method. Does it help you to have a higher FTE count? Not necessarily. What matters is the change in your FTE count from one comparison period to the other. The method that is best for you will be the one that lessens your percentage change and thereby lowers your reduction in forgiveness. The next column is salary hourly wage reduction. If you are using this form, this is one of the two possible reasons that you are here, the other being a reduction in FTE count, which we are slowly getting to. The salary hourly wage reduction means that you reduced an individual employee's salary or hourly wages by more than 25%. Please keep in mind that you can reduce an hourly wage employee's hours by more than 25%. You just cannot reduce their hourly wage by more than 25%. In the same vein, you can also reduce a salaried employee's hours worked by more than 25%. You just cannot reduce their effective annual salary by more than 25%. Also note that if the employee had an annualized rate of pay in excess of $100,000, you do not have to make this calculation. There are some interesting methods on how to determine if an employee had an annualized rate of pay in excess of $100,000, and they may not be what you think. Before we go into calculating the impact of a salary hourly wage reduction, let's make sure that we understand how an employee can be classified as a $100,000 plus employee, because if they can, we can move them to Table 2 and forget about making a wage reduction calculation. To calculate if an employee had an annual rate of pay in excess of $100,000, we can choose any pay period in 2019 and annualize it for the whole year. This means that we could have an employee who was paid $60,000 in 2019, but for the purposes of this analysis, can be classified as an employee with an annualized salary in excess of $100,000. If you are unclear on this point, you should pause the video and take a look at the example we provided. If the employee did not make over $100,000 in 2019, and we reduced their salary or hourly wage by more than 25%, then we need to move to the calculations. The steps are shown on page 4 of the instructions, on the page called Instructions for PPP Schedule A Worksheet. Let's take them one at a time. In step 1, we first determine if pay was reduced by more than 25%. We enter the average annual salary or hourly wage during the covered period. For an hourly employee making $20 per hour, we would enter $20. But remember, for salaried employees, it is the effective annual salary that is important. As an example, let's say employee Jane had a full-time salary of $50,000 during the period between January 1st and March 31st, 2020. There are 2,080 work hours in an annual full-time schedule. This means Jane had an effective annual hourly salary rate of $24.04 per hour. Now let's say Jane's hours were cut to 24 hours per week during the pandemic, but we still paid her at an effective rate of $24.04 per hour. At this pace, Jane would only earn about $30,000 this year. However, we have not changed her effective annual salary, since if she was working full-time, she would still earn $50,000. So for Jane, we would not have to make this calculation. This example shows the importance of understanding that it is an effective annual salary that matters for this calculation. Now let's show an example with an annual salary that actually decreased so we can follow the math through the form. Let's use our employee Bob. Bob had an annual salary of $50,000 during the first quarter of the year. Bob continues to work full-time for the business during the pandemic, but the business cut Bob's pay to $30,000 annually. For Bob's calculation, we would enter $30,000 in item A. In item B, we would enter $50,000, Bob's historic salary. In item C, we will divide 30,000 by 50,000, yielding 0.6 or 60%. This is less than 75%, so we proceed to step 2. In item A, we will enter Bob's annual salary as of February 15th, 2020, which we have already said was $50,000. Item B will be a bit more difficult to calculate for Bob. We have said that we cut Bob's salary to $30,000, but we did not do it exactly on February 15th. We did it on April 1st. So Bob's salary for the period between February 15th and April 26th will be 35 days at $50,000 and 26 days at $30,000, which equals $41,475. This is less than $50,000, so we move to item C, which is one of our safe harbors. If we were able to restore Bob's salary to $50,000 by the date of our application for forgiveness, or December 31st, 2020, whichever is earlier, all is forgiven, and we do not have our forgiveness amount reduced. However, let's say that we have not been able to restore Bob's salary, and he is still making $30,000 per year. So we will enter this amount and move to step 3. In item A of step 3, we will multiply Bob's former salary of $50,000 by 75%, yielding $37,500. This is the amount that we could have reduced Bob's salary to without suffering a penalty in our forgiveness calculations. In item B, we will subtract Bob's new salary of $30,000 from $37,500, yielding the amount by which we will have reduced Bob's salary in excess of $25,000, which is $7,500. The instructions for these calculations are continued on page 5, so we will need to flip the page. Since Bob is a salaried employee, we need to move to item E to complete the calculations. Items C and D are for hourly employees, and we'll return to those in a few minutes. Now in item E, we just need to calculate the amount by which our forgiveness will be reduced. It will not be reduced by the entire $7,500, since this is the annual calculation, and we will only be penalized for the portion of the year in our covered period. We will do this by multiplying the annual reduction of $7,500 that we just calculated by the number of weeks in our covered period, and then dividing that number by 52 weeks in the year. I'll assume that we are using a 10-week covered period. Of course, it could be any number of weeks between 8 weeks and 24 weeks in your covered period. For Bob, this calculation would yield a reduction in forgiveness of $1,442. Note that the amount of forgiveness we will lose will be impacted by both the severity of Bob's pay cut, but also by the length and time or duration of our covered period. Let's go quickly through an example using an hourly employee, just so we see how the form differs. This approach is the same, but the math will be a little bit different. since now we are calculating the reduction on an hourly basis. Let's say Sam is paid $20 per hour historically, but had their hourly rate of pay reduced to $12.50 during the covered period. We could probably stop right here because Sam would have quit, filed for unemployment, and made more money. But let's say that for some reason they didn't quit. We would enter $12.50 in item A, $20 in item B. The division problem in item C would yield 0.625 or 62.5%. Step 2, item A, would be Sam's historical hourly wage of $20. For this example, we will assume that we reduce Sam's hourly wage to $12.50 right on February 16th, just to make the math a little more straightforward. $12.50 is not greater than $20, so we move to item C. Again, we will assume that we have been unable to restore Sam's wage to pre-COVID levels, so we would enter $12.50. In step 3, item A, we would multiply Sam's historic wage by 75%, yielding $15. We next need to subtract $12.50 from $15, yielding $2.50, which is the amount that we reduce Sam's wage in excess of 75%. Flipping the page to page 5, in item C, we will enter 40 hours, since Sam has always been a full-time employee. If Sam had worked less hours, we would have entered a lower number. In item D, we will first multiply 40 hours times the $2.50 in excess reduction, yielding $100. We then multiply $100 by the 10 weeks in our covered period, yielding a reduction in forgiveness of $1,000. Where do these numbers go? We now return to Table 1. We enter the cash compensation that we paid to Bob and Sam during the 10-week covered period, and enter the salary hourly wage reduction in the last column. Now let's say we had an additional employee so that we can look at how an FTE reduction exception would be handled on this table. Our additional employee's name is Ralph. Let's say that Ralph's hours were reduced from 40 hours per week to 20 hours per week, and Ralph makes $20 per hour. By either method of calculating FTE, Ralph went from being a 1 FTE to a 0.5 FTE. We would enter Ralph into the table as shown. Notice that the wage reduction amount for Ralph is 0. That is because we did not reduce his hourly wage, just his hours. We may incur a loss in forgiveness for Ralph since we reduced his hours, but that will come in the form of an FTE reduction, not a wage reduction. Our new totals can now be shown. We have one final consideration to make for Ralph, and it is in the box called FTE Reduction Exceptions on page 5. Here are the rules as shown on that page. As displayed, there are a number of actions that we could have taken that would allow us to continue to count Ralph as a full FTE. Let's say that we offered to restore Ralph to full-time at the same rate of pay, and he refused to take the offer. We would be able to use this exception to count Ralph as if he had been a full FTE. However, if when Ralph refused to come back full-time, we had hired somebody else to work the 20 hours, we would add them to our table and cannot use the exception for Ralph, because that would essentially be counting the position twice. Once, because we filled it with someone new, and twice, because we counted the exception for Ralph. This is not allowed. We can only count it once, and in this example, we will assume that we did not hire a new employee, but counted Ralph's refusal of full-time employment as an exception. So we would enter it as shown. We are now ready to move to Table 2. This is where we will list employees who had an annualized salary in excess of $100,000. This table does not have a column for salary hourly wage reductions because we do not have to make this calculation for these employees. Effectively, this means that we could reduce compensation to these employees in excess of 25% and not suffer a direct penalty for this reduction. Also note that although we can certainly pay our employees more than $100,000 per year, we can only include the portion of their pay up to $100,000 per year for forgiveness. This amount is roughly $1,923 per week, which is $100,000 divided by 52 weeks. So if our covered period was 8 weeks, the most we can claim per employee for forgiveness is $15,384. For a 24-week covered period, that amount will increase to $46,152. Your maximum amount will be based on the number of weeks in your covered period. Also note that owner employees are treated differently, and we'll get to them in a minute. The FTE information on these two tables will be used on Schedule A to determine if we had a reduction in our overall FTE count. However, before we turn to Schedule A, we should consider the Safe Harbor 2 at the bottom of this worksheet. Essentially, these questions will ask us to compare our FTE count on the day of the declared disaster, February 15th, 2020, to our FTE count in the 10 weeks following the day of the disaster. If our FTE count declined during this period, the assumption seems to be that the pandemic was the proximate cause of this decline. We will then be given an opportunity to certify that we were able to restore our FTE count by the day we submit our application, or December 31st, 2020, and if we have restored it to February 15th levels, we will not suffer a reduction in forgiveness. Let's go through these questions one at a time. In Step 1, we are asked to calculate our FTEs for the 10-week period from February 15th through April 26th, 2020. We must use the same calculation method that we chose for completing Tables 1 and 2. Yes, this is a new time frame for which we must now calculate FTEs. In Step 2, we will calculate our FTE count for the pay period that includes February 15th, 2020. This will come up again in a moment, but when the SBA says to calculate FTEs for a date, they mean calculate it for the pay period that includes that date. This could be a different time frame for different businesses and is based on your payroll schedule, be it weekly, bi-weekly, bi-monthly, or something else. Step 3. If our FTE count was greater on February 15th than it was in the following 10 weeks, then we've had a decline in employee count, and we'll move to Step 4 to see if we can take advantage of the safe harbor. If our FTE count increased, then we do not get to use the safe harbor. In Step 4, we will enter our FTE count as of the earlier of December 31st, 2020, or the date upon which the application is submitted. This is an example of where when the SBA says a date, they mean for the pay period that includes this date. Step 5. If we restored our FTE count to pre-pandemic levels, then we get to enter a 1 on line 13 of PPP Schedule A. That's good, because it means that we will not suffer a loss in forgiveness for the decline in FTEs. Where are we in the process? Well, we are now done with the worksheet. Congratulations. And now we're going to move to Schedule A. Let's tackle this schedule one section at a time. The first schedule is Table 1 totals. Simply put, we will enter the totals we calculated in the table on this schedule on lines 1 and 2. On line 3, we will enter the total for any salary hourly wage reductions that we calculated. For some reason, line 3 also asks us to check a box and enter 0 if we did not reduce anyone's compensation by more than 25%. If this was true, then our totals in the table should be 0 in any case. But I guess they really want us to also check the box. The second section asks us to enter some totals from Table 2. Find the numbers and enter the totals. So far, pretty easy. But now, things will get a little bit more complicated. Lines 6 through 8 deal with non-cash compensation. The rules for what to include in these items are set forth on page 3 of the instructions. You may want to get that page and look at it as we go through them. Line 6 asks us to enter the number for paid and incurred employer contributions for employee health insurance. The most significant points are that this is just the employer's contributions towards health insurance. You cannot include contributions made on behalf of self-employed individuals, general partners, or owner employees of an S Corp. The reason for this is that these payments should have been reflected in the 2019 income that was reported for these individuals, and as such will be included in their income reimbursement below. Line 7 asks for employer contributions towards retirement plans. Here, self-employed individuals and general partners cannot be included in these amounts. However, owner employees of S Corps can. Again, this relates to how income is reported for these classes of individuals. Line 8 is where to report state and local income taxes paid. The rules specifically state that these taxes have to have been paid to be counted here, so do not include incurred taxes. Also, this is just state and local taxes. You cannot include federal taxes. We now move to line 9, compensation to owners. The rules on this are quite clear, and they place a cap on the amount of income that an owner can use towards forgiveness. Essentially, owners are limited to the lesser of 2.5 months of their average 2019 reported income from the business, or 2.5 months at a rate of $100,000 per year, whichever is lower. Why? The fear was that an owner could fire all of their employees, take all of the PPP as personal income, and have it all forgiven. You and I would never do that, but someplace there may be someone who would have tried to. This rule caps the owner's forgiveness at the same dollar amount that was used for calculation of the PPP loan amount. In line 10, we just add together some of the numbers from above to come up with our total payroll cost eligible for forgiveness. The bottom section deals with FTE count for the business. First, the form asks us to consider if we are eligible for one of the safe harbors. If we are, we do not have to worry about the FTE reductions, can check one of the boxes and write 1 in line 13. Let's go through these safe harbors again. The first one is that we had no reduction in employees or average hours paid. That's not really a safe harbor, that's just how the rules work. Safe harbor number 1 means that we were not able to operate at the same level of business activity due to compliance with government requirements or guidance. This is an important one, and many businesses will be able to qualify for this safe harbor. Let me emphasize that this is a yes or no question. The business does not have to link a 50% FTE reduction to a 50% business reduction. If they were not able to operate at the same level, they are exempt from making this calculation. period. Please also know that you do not have to have a direct order from HHS, CDC, or OSHA to use this clause. Additional guidance, not shown here, from the SBA says that an order from the state or local government is sufficient, since it is based in part from guidance from one of the federal agencies. So if you have an order locally here from the city of Boulder or the county of Boulder, you can use that order to qualify for this safe harbor if it did not allow your business to return to the same level of business activity. The third is safe harbor number 2, which we have already dealt with in the worksheets. Okay, so you did not qualify for any of the safe harbors and you had a reduction in FTE count. How much is it going to cost you? Well, we have to quantify how large your reduction was. The first step is to determine what your base FTE count was. Each business has a choice of 2 time frames in which to make this calculation, and seasonal businesses have a third additional choice. You can and should pick the time frame that gives you the lowest FTE count, since this will lower the amount of forgiveness reduction that you will receive. Remember, you must be consistent with the FTE methodology that you select. The time frames for most businesses are either February 15th, 2019 through June 30th, 2019, or January and February of 2020. Run the numbers and pick the one that is best for you. Seasonal businesses have a third choice, which is any consecutive 12-week period between May 1st, 2019 and September 15th, 2019. On line 12, you will enter your FTE count during the covered period, which thankfully we have already calculated in the worksheets. So find those numbers and enter them here. On line 13, we will divide our FTE count during the covered period by our historic FTE count. For most of us who have gotten to this point in this form, this should be less than 1. If it isn't, we probably could have used the easy form unless we had a salary hourly wage reduction that we had to deal with. This is the amount that our PPP forgiveness will be reduced for reductions in our FTE count. How far have we gone? Well, we finished the worksheet, we finished Schedule A, and now we're ready to go on to work on the calculation part, page 1 of the application. Everything we've done so far is essentially the difference between the easy form and the full form, so the rest should be easier. The first sections are pretty straightforward and will come right from your loan documentations. Let's start by looking at employees at the time of the loan application and at the time of the forgiveness application. Here they are, 2 more dates upon which to calculate FTEs. We've done it for our covered period and perhaps for multiple reference periods. Now we are asked to calculate it at the time of the loan app and additionally at the time of the forgiveness application, although we may actually have this latter one since it could be the same as our restore date that we've used before. You must be an expert at making these calculations by now, so have at it. If we received an idle advance amount, we will enter it in this line. We will enter our covered period or alternative covered period here. We've gone over this, so it's old hat for us by now. In this box, we will check this box if we received more than $2 million. If we check this box, we should make sure we have a good accountant because it is highly likely that we will be audited. Why? That belongs in a geek note. I will just add that any business that is not sure if the PPP was a necessity for them should probably read this geek note, even if you received less than $2 million. Now, on to the calculations on this form. Line 1, payroll cost. We've already done this one, so just put in the number. Line 2, business mortgage interest payments. This seems pretty straightforward. 1 point, a business can include interest payments paid and incurred during the covered period, but cannot include prepaid interest payments. These are not allowed to count towards forgiveness. Do notice that the mortgage has to have been in place on or before February 15th, 2020. If it wasn't in place at that time, you cannot use those payments in this calculation. Line 3, business rent or lease payments. Again, you can include paid and incurred expenses. Unlike mortgage interest, there is no limitation on prepayments as long as they were paid during the covered period. Why is this true? I'll leave that for the next Geek Note. Again, these rents or lease documents must have been in place on or before February 15th, 2020. Business utility payments. You can include both paid and incurred. In theory, you could prepay, but I don't think many of us will do that for this expense. In line 5, we calculated our salary hourly wage reduction in our worksheet. So enter that number here if there is one. Line 6. This is where we will add up all of our qualified expenses and deduct a wage reduction number if we had one. Line 7. If we reduced our FTE count, we will enter the quotient here. Line 8. This shows our modified totals and gives us the impact of any wage reduction or any decrease in our FTE count. In line 9, we enter our PPP amount. In line 10, we divide our payroll cost on line 1 by 0.6. This is the threshold that we must spend at least 60% of the amount forgiven on payroll. Remember, it used to be 75%, but now it's 60%, a much easier hurdle to clear. Line 11 is our forgiveness amount. Here we will enter the smallest of lines 8, 9, or 10. This is the amount that we will be forgiven. But wait, it seems that there's something missing. Weren't we told that we would not be forgiven the amount of any idle advance that we received? Yes, that is true, and it is still what all the documentation says. So either they will change this form before they start accepting applications, or more likely they will deal with this liability by addressing it somewhere further along in the process. What's going to happen to this idle advance amount? We'll leave that for our final Geek Note. The math is done. We finished the worksheet. We finished Schedule A. We finished the calculation form. All we need to do now is read and sign the certifications and provide the optional demographic data and prepare our documentation. The documentation that will be required is spelled out pretty clearly on page 6 of the instructions. Assemble them carefully and provide them with your application to your bank. The more carefully you prepare and present these documents, the easier your forgiveness application will be processed. With the new rules that were established by the Flexibility Act, most businesses should be able to receive full forgiveness. Since you are completing the form, yours may be one of the exceptions. We expect that most banks will start accepting forgiveness applications sometime this month. Each bank may have its own timing and may interpret some of these rules differently. You must comply with the rules as interpreted by your banks. If you have any questions, if you've seen any oversights or clarifications that we should add to this video, or if I've made a mistake, which is quite possible, please let us know. We hope this process goes smoothly for you and looking forward to 2021. Thanks, everybody, and good luck.